What is up, boys and girls? Mpire Steve back with you yet again. Today is Saturday. It is the 8th of July. I just want you all to know that my birthday is in a couple weeks. I'm going to be a year older. Yikes. Ha. It's July 24th. An interesting date, I'm sure, for you all. And anyways, I'm going to show you guys and girls the power of these indicators. So everybody already knows that I use fair value gaps by Nephew Sam. Okay, the only difference is I like to have these a little bit darker, or brighter. So if you go box visuals, these are my settings. Okay, I'm not going to really extend the boxes anymore because it clouds up the screen. This is lazy man's fair value gaps, and most of the time it doesn't miss any. Sometimes it does, sometimes it doesn't. It really just depends. But if you go to the default settings, this is down here. I like to have it a little bit brighter like that, and this will be the visual. So if you, because the market starts selling off, but if you have it, I think it starts like right there, but I want it a little bit brighter so I can actually see it. So there's that. If you want to change your candle colors, by all means, it's up to you. That way you can see it within the boxes. But I just want to show you the power of these. And another thing is, actually I'll go into that in a second. So I'm going to hit, that's really it, right? There's nothing else. So these are my settings. All right. And then this ICT Concepts by Lux Algo. This is something I've been toying with. So, and I recommend you all to get this as well, but I'll show you my settings that I use. So the length of, so the market structure part, I have all this enabled and the length is 5. I haven't really toyed around with it too much. So I'm just going to leave it at 5. And then I don't have show displacement. It says visual VIs. I don't really want that. I don't want the show order blocks. And yes, I guess use candle body. I do like to show liquidity. I don't use the show fair value gaps because I don't think it's very accurate, or balance price range. But I do use the new week opening gap, and it goes by 3. You can change it to 1 if you want. And I want to show you the importance of this, and I don't do the kill zones or the Fibonacci, none of that. So I just have the market structure shifts, and this stuff right there. I don't know what the BO, I can't remember what that means, so I'm not going to worry about it right now. I do like to show liquidity, and I do have the new week opening gap. You can use the new day opening gap if you want. I don't think it's as useful. That's just my personal opinion, and I don't have the kill zones. Okay, so I just have a few things, and that's that. And I do want to show you the power of it. So here we are. So we have all of this, and this is Thursday, okay? And you have this buy side liquidity up here. Right, this is from Thursday, and you have the market opening on Friday, and we knew we had news. We had non-farm payroll, right? And what does price do? We literally come up and take out this buy side liquidity, like boom, and then it flushes. Okay, well, it comes back down. We don't quite take out this sell side from right here at this London time frame, or the London session right here. We don't take this out until late in the day. But I do want to show you the importance of the new week opening gap. When you see price shift, okay, and it comes into this new week opening gap, I believe this is exactly why we started to run down. And 2 reasons. This one right here comes into this new week opening gap, takes it out, okay, takes out this liquidity from here, which this indicator did not throw that in there. Sorry, you're going to hear a car right now, but I'm going to go to the 4 hour. So look at the 4 hour. What do you see on the 4 hour? So this, you want to go through all of your different time frames. So on the 4 hour, you have this bearish gap. If we come right into, we just barely touch it, right, bam, and then boom. So we failed inside this fair value gap. We did this on, so this is Friday, I can't remember what the time frame is. I'm gonna draw this just so we can see it. So you can see the importance of it. So there's that. Now I'm gonna go down to the 5 minute. So this is what I drew right here, this box. We get above it. This is the new week opening gap. We take it out, then we start selling. And I took this play right here. I did it on Twitch, so I advise you all to follow my Twitch as well. It's in the description. You can get my Twitch link. The good thing about Twitch is that it's two things. I can play music, so that means I can have music going, and I can be streaming, and you guys can just be watching my chart and listening to the music if you want, or you don't have to, just mute it. But if I'm on a call and I'm working, I can still be trading. I just may not be able to talk. So my Twitch link is down below in the description. Tear it up. I'm probably going to start using Twitch a little bit more. And you won't get that latency. So there's that. But anyway, here's this. I took this play right here, like right inside here. I bought around this area, like in this zone. I held that play for an hour. And I just waited and waited and waited for us to take out this market structure shift. I did not hold it that long. I eventually trailed too far. I was at first expecting us to take this out, and we did. And we did go a little bit lower, and obviously we took it all out. We even took out this low from the 1030 area. So perfect entries inside of this or close to this fair value gap. You have another one formed right here. We don't quite get to it. You have another one right here. We have a swift rejection. Perfect entry. Like, let me go in a little bit closer just so you can see it. This is the 5 minute chart. Boom. And then you have another entry right inside this one. Price just keeps going and going. We take out the low of the day. Like, this was the low of the day of the New York session, and we took that out. Like, these fair value gaps are your best friends when you're following the trend. You see a shift in the market. You see that we are rejecting inside this new week opening gap. You see we have multiple red candles. You could have just got in and held it. I think I only got like 35, almost 40 points out of the play, and then I was just done. I made 2,000. I mean, I was down initially. I was just trying to get some back. It was one trade. I just took one trade Friday afternoon, and it was that play. It was right here, and I can actually show you. Let me pull it up. So let me click on this, and you can see right here. So I got in at 1350 when we rejected there. This is a 1 minute chart. You can see this 1 minute. We did wick above it, and boom, and I entered again, and I just held it, and I could see that we weren't basing above this area. So you have a small gap there, and I sold at like, this is 14. I was all out at like 14. So that's almost 3 o'clock. It's like 2:40. Okay. So then here's 2:40, right? Like right in this area. I got out. And then I was just done. I had made back 2,000 of the initial loss that I had on my personal account, and boom. I wish I would have stayed in it a little bit longer, especially since we have this fair value gap, which we did not reject, but I was happy with it, and I closed it down and didn't look again until later yesterday evening. So these tools are your best friends. I recommend you use them and see how your trading is, but I think we should implement a rule first. you don't want to overtrade. You don't want to keep trading, and you don't want to trade inside of this area right here. I burn myself. Sometimes I catch big ones, like this is the open, 9:30 open, and then you have 10 o'clock right here. It does not make sense to trade inside of that, because the market's trying to figure out what's going on. I would even say so close to 9 o'clock. Like, look at this chop. It's pretty gross. Well, I did take a short in here, which is fine. It's okay to do that. I'm gonna go down to 1 minute and it'll make a little bit more sense. So I saw that we were coming into this 4 hour, and because this is the 4 hour, and we failed in the 4 hour. Plus also this is the new week opening gap. Like, this is the top of it. We didn't quite get to it. I saw this and I kind of chased. I can't remember where I got in, and I did not hold it for the duration of the move down because I did not expect us to take out these lows. I figured we would probably retrace, which we did. We come up into this fair value gap right here, and this is where a lot of people took shorts, was right here, right inside there. A lot of people took shorts. This is 261, came down all the way to 185, so almost 80 points, 70 or so. And then here comes this 9 o'clock to 9:30. So between 9 and 10, it's a little gross. You can see there's some fair value gaps here. We wick below it, kind of gross. It's just choppy. And then the fun begins after this time. So we take out this low. So if you were to draw, and this is where you need to be drawing, you need to be having this stuff. So we took it, this is liquidity. Price comes up, comes right back down and takes out this liquidity. And once it does, what do? Price goes and takes out this liquidity. Boom, we took out the sell side. Now we're going to go reach and take out the buy side. And this is where you want to look for your plays for the reversal. And this is where the rules come into play. You only want to take a couple trades a day. So I'm thinking maybe 2 trades in the morning. If you're successful, great. Maybe look for something after 1 o'clock, after that lunchtime. So 2 trades in this area. And I don't really see too much. It's where the power of the 5-minute chart. Let's look and see if there's anything inside this. So we do wick below here. So you do have 1, 2, 3 green candles. And you have a small fair value gap right here. We do wick below it, and then price continues up. You don't have anything right there actually. Right here you have a banger. You could have waited. This is 11:55 though, and I don't like to trade at that time. But comes up, boom, and goes right into this top of this new week opening gap. And you could have got in right there. This is 290 up to 359. That's 70 points. That's great. But here's this. That's lunchtime. I don't like to trade between these times. I do it sometimes, but sometimes it's great and sometimes it's not good. Then you don't really want to trade between 12 and 1, but you can. Like, this does make sense. It's up to you. Go and take out this 4 hour, the very top of it. And then you have these fair value gaps and price starts selling, and then we go and take out this liquidity. So I'm going to move this. Boom, took out this liquidity. So you need to be you need to be marking out your lows and your highs once they form. So this was the prior high. We take this out, and then price, boom, comes and takes out this sell side. And these fair value gaps are very powerful. That is it. That's all I wanted to show you. Go add these to your charts, do some back testing, do the replay. go back to a different day and see what you can find. Very powerful tools. You only need these two. That's it. And see what happens. Just take a couple trades a day. If you screw up the first two, call it a day. Don't try and revenge trade, and don't burn yourself. So that is it. I hope you all have a good rest of your weekend. If you have any questions, comments, leave those down below. Apex is 80% off. You can use my code. It's down below, also in the subject of the video. And also you can do Top Steps on sale right now. I don't have a code for them. I'm not an affiliate, but they are on sale. Interesting. I think that's on until the 16th or 19th. I can't remember, but that's it. Have a good rest of your weekend. Leave a comment down below if you have any questions, and I'll try and go over that in another video. Take care and see you Monday.